I want to go over the two trades that I took today. Both were winners and both were really nice entries and price delivery. So today wasn't really expecting much. No news Wednesday, but we had some serious displacement right at the open, and this is why it's important to trade in real time because these candles were coming down very, very fast. So I normally don't like to enter on the 1 minute when we have all this displacement. So I first switched to the 5 minute, and I wanted to see where we were in regards to the 1 hour, these 1 hour lows, and our midnight opening price. So initially I was bearish on the day, just because I wanted to see these lows that were right outside of the midnight opening price get hit. So these lows here, or this low here, and then these lows inside of here. And ultimately, I'll just make this one that one, and ultimately this. We have a very nice reaction off this 5 minute fair value gap. Order block here, turtle soup, more importantly. Buy side liquidity was taken, and then we got a very aggressive move back into the range. So my initial thoughts, I wanted to see where we were, what kind of candle close we would get after 9:30, and this is exactly the candle close I wanted. I wanted to see a candle closure below midnight, and I wanted preferably below this low, and that's exactly what happened. We also now created this as a 15-minute or 5-minute breaker. So I had that marked out, and when you have a lot of displacement like this and speed, I always like to use the standard deviations to find where I should be looking to get my entry. So we have our fair value gap getting hit, 5 minute, buy side liquidity up here getting swept. We now have a change in the state of delivery up here. This should now be a breakaway gap. Why should this be a breakaway gap? In real time, like I said, if you look at the 1 minute, you can see how many gaps are up here, and this all happened very fast. These are very energetic candles. So if I use my standard deviations from here to here, we can see that we have our silver bullet zone in line with our midnight opening price. We also now have a 5 minute fair value gap that I was anticipating price to get held at. We have our first leg of 15-minute or 5-minute liquidity got snagged, so I was looking for a retracement back into the range, and all I was targeting was this 5-minute fair value gap. I honestly should have held for lower, but I wasn't anticipating to get this much follow through on this day. But I guess since we had this super nice sell off and a lot of displacement, I should have been able to hold. But I am still getting used to trusting my drawn liquidity, and I did take this on a 0-day QQQ options put. So if I play price, what do we get? We get our candle up, and if you go to the 1 minute, you can see it on the 5, but we get a turtle soup here as well, but it's a lot cleaner on the 1. So here's that area that we were anticipating. In my head, I wanted to see this high stay protected. Why? Because it completely filled this 1 minute fair value gap, and you can see that this high was protected even by one tick. We got a turtle soup up here, and now we got our break below this last up close candle that was telling the rest of the story. This got inverted, and price ended up just knifing all the way down. So I did sell right here. This was a 28 point move on NQ. If you would have taken this on futures, my contracts on 0 days went from 59 cents to 82. That's where I got out at. And if you held, the contracts did end up hitting or the price did end up hitting our full take profit, and they were almost $2 down here. So they went from 59 cents to almost $2 if you would have held the entire time. But I was not really anticipating this low to get taken today, if I'm being honest. These were relatively clear, and I definitely should have held for those. But regardless, still a really nice trade. That was the first trade of the day, and now I will go over the last trade that I took on my live account on futures. I took this on the micro NQ, and this was the 350 macro to end the day. So price was just chopping all day, and I wasn't really anticipating anything until we got this really nice energetic move at the end of the day. So this right here is what I was looking at. This was a 5-minute breaker that I wanted to see support price. It does right there. We leave breakaway gaps, then we get these really nice energetic candles on the 5-minute. So what do I do once again? What am I targeting first of all? We have undeniable bullish order flow. We get an inversion of this 5-minute fair value gap right here. And we have our midnight opening price, and what do we have right outside of midnight opening price? We have a pool of buy side liquidity. That's very important, right? You can see I'm always pairing the two. This is how smart money operates. They want to be selling short above or at 8:30 and or midnight. You can see, what do? We sold off above midnight opening price. Now, what does smart money do? Smart money buys in a discount. What's a discount? Below the midnight opening price. So realistically, I should have got in down here, but you still are able to make money catching this leg up. How do I know that this gap's going to hold and not come back into this area? Once again, speed, displacement, energetic candles are telling the story. So what did I do? Standard deviations, once again. What do we have? Silver bullet zone, inversion fair value gap, 5-minute fair value gap, down close candle should act as support. 2 standard deviation lining up with midnight, very good indication, and our sell side or our buy side liquidity pool is just outside of that. If I go to the 1-minute time frame, because that's how I enter, what was I looking for? We were chopping around. When you are inside of this silver bullet zone, this is where we're normally going to get some form of chop before our next leg of expansion. This is our second leg of accumulation inside of this area. I saw this low here, and we failed to displace above after we took out this high. We immediately came back into the range. I anticipated this to get turtle souped. I caught this soup here. I got filled at 79.50. I had my order filled right at the top of this candle. I got filled 79.50. Stop loss, very tight stop. My stop loss was right here. I had 9.5 points of risk for a 25-point take profit. So I once again, did not fully trust my drawn liquidity. That is something I'm working on. I'm trying to be 100% transparent. I understood that price was going to go higher, but I did not want to hold for this just because price has been weird. And like I said, I still am understanding and learning that I need to just trust all the work that I'm putting in and be diligent enough to hold my trade all the way to this target, right? But I do only have, I only took one micro contract just because it's on my live account. But turtle soup entry, as soon as we broke above this high, I moved my stop to break even, and my take profit got hit. I sold at 05 and a quarter, just because I sold 1 point before the 2 standard deviation and midnight. You can see after what happens, we kind of stalled at midnight. We ended up taking our 5-minute buy side liquidity target right there, and you can see where price ended up stopping at. So pretty much bottom tick this. Very beautiful entry. 2 really nice trades. That was the complete reasoning and thought process behind these two. Speed, displacement, energetic candles really do tell you the story. That's how you know you're getting institutional sponsorship behind order flow. But that's all for me in this video. If you guys have any questions, let me know down below, and I'll see you in the next one.